Mina protocol is at an absolute run. In the last 7 days, the price of Mina more than doubled. And that's all because of one single reason. It's a listing on an exchange, Upbit, the leading centralized exchange in Korea. Isn't that interesting, right? It seems like it needs nothing else but a listing on a centralized exchange to push up prices that massively. It used to be a listing on Binance. Now it seems to be the Upbit listings that have most of the price impact. This nice rally over here, though, is not the complete story. This is the complete story, rather. This is Mina over the long term, and it had been a complete destruction of capital, unfortunately. Now, on a linear scale, this doesn't look as bad. Still, the waves here are massive. A drop of roughly 80% to then rally again almost 600% to then drop again by 94%. So really riding those waves in a volatile asset like Mina is incredibly important. You can't just buy and hold this token. One straightforward way to time those waves is with moving averages, right? So we can bet on falling prices whenever the price is below. We can bet on rising prices when the price is above the moving average. So you would be long, bet on rising prices over here when we go up by 44%. And then we would be in cash or bet on falling prices when we are falling 48% over here. So you're riding those waves. The question though is, what's the best moving average duration here? Because this, what we see here on this chart, that's a 100-day moving average. Why not take, for example, the 50-day, which is closer to the price, which triggers the signals a bit faster. So now it's a rally of 64% and a decline of 55%. But then we also have these fake outs a bit more often, right? Because now the moving average line is closer to the price, and sometimes we simply go above and below, and that obviously also incurs trading fees. So it's not obvious what moving average duration works the best for Mina protocol. That's why we have to make a backtest. We have to run simulations of buying and selling the token, including trading fees, and then see at least historically what would have been the best moving average. It might not be a perfect approximation of what will happen in the past, but it's definitely better than just randomly picking, say, the 100-day. And so what we have over here is an Excel spreadsheet starting in June of 2021 all the way to today. And I've run the backtest with trading according to those moving averages, including a 0.2% trading fee. We go long whenever the price is above and short whenever the price is below. Buying and holding would have destroyed the capital, right? We see this over here, compounded minus 56% every single year. But then we've got these moving average durations, right? Simple moving average, exponential moving average, which did do quite nicely. We also have a different representation of the same data. That's this over here. On the x-axis, the moving average durations, so from 2-day all the way to 200-day. On the y-axis, the annualized performance. Pretty much any of those moving average duration trading strategies outperformed buying and holding, right? Buying and holding here is in black, the black line. Only the very short-term moving average durations underperformed because those then have a lot of trading and then the fees really kick in. But once you go a bit above, say above the 10-day moving average, you really outperform. And this is annualized, right? So compounded every year, the geometric average. So the best exponential moving average is here, the 19-day. The best simple moving average is this one, the 40-day, right? So over here, 19-day EMA, over here, 40-day SMA. So let's look at that. Let's add those moving averages to the chart and see how this currently relates to the price. So 40-day SMA and 19-day EMA. That's historically what worked best for Mina. And again, of course, we have our failed signals, but that's why we make those backtests, right? To find out what's the best relationship between bad signals and catching the waves early enough. Now we have shot up that quickly in Mina protocol that we would still be bullish if the price today collapsed by, say, 35%, right? It would still be above the EMA. That being said, as longer as we keep those elevated prices, the more those moving averages will approach the price, and then we could take profits earlier. So this is the way to do this, right? When you're on tradingview.com, you simply enter / and then you enter moving average. Once you add this to the chart, you double click on that line and you change the length. make sure at the same time that over here you've got selected the 1 day interval. Now, how well did this work? Let's have a look. This is the 40-day simple moving average. So in turquoise, we've got the back-tested return. In white, we've got the Mina protocol price. That's on a linear scale. This is the same here on a logarithmic scale. A very constant, ever increasing outperformance. Very nice, right? Logarithmic scale means a 10x from one another with each of those horizontal lines. So this pretty much made a 10x, shorting the token every now and then, while the price itself went down quite massively. Here we've got the 19-day EMA, which slightly outperformed the SMA, but which also has a bit more volatility in its return performance, right? Look at this. This is going up very, very constantly. The EMA has more drawbacks. In the end, for a higher end result, but more volatility, this is how the chart looks on a logarithmic scale. If you want to get your altcoin backtested, feel free to join the premium membership. Simply request your altcoin and I run the numbers. There's also an overview of all kinds of results of backtests that I've already done. You can also download the Excel spreadsheets over here. There's also a free Telegram channel. Link is down below.